it's just a broad overview of the market. So you see, there was a lot of turbulence this week in the market, probably because of the global peers. So, what is your take on the current market performance given this turbulence?
If you look at global markets first, because you started the questions with global indices,
Yeah.
we have noticed that the Dow, the DZI has corrected in the last 4 5 days. It corrected from 41,200 to 38,500 zone. And we have noticed that Dow was comparatively underperforming the broader market in last couple of quarters. However, the Nasdaq and S&P were outperforming. What we noticed that the Indian market was doing well till the end of July series.
Yeah.
And on the 1st of August, it made the new lifetime high at 25,071, and we were celebrating the new milestone of 25,000.
True.
But then suddenly some global concern came in picture. It started with 3 or 4 key date trigger. First was the Bank of Japan cut their interest rate, and that was higher than the expectations, and that triggered the selling pressure in the Japanese market. And on that day, Japanese market were down by around 20%. And the reason behind that was the yen carry trade. So there is the trade activities which usually happen between the Japan and the US, that people buy the currency and take the loan from the country where the interest rate is lower and currency is the weak. They borrow the money from that currency and then they borrow and then invest the country where the currency is expensive and where interest rate is high. So the entire this problem started with the yen carry system, and because of that, your Japanese market started to witness the corrective move. And immediately after that, the US was down because US jobless data was uh, comparatively lower, comparatively not in the line which was expected. Even the US PMI data was lower than last 8 months. So these two data also triggered the negativity in the global market, and the reason being the selling pressure started to happen in the US and all other emerging and the developed nations in equity markets. And same time, we have noticed the VIX, the CBOE VIX, that is the volatility index of US, has seen a spurt from 16 to 65 levels. So on 5th of August, your CBOE VIX headed to 65, and that is the recent highest number in the CBOE VIX. And at the same time, the India VIX, which is the greed and fear indicator and the volatility index of India, also seen a spurt till 23 marks. So all these trigger happen, and suddenly the selling pressure started to occur in all the global markets. And reason being, the Nifty also corrected by around 1,200 points from 25,078 to all the way to below 23,900 level. Now, what happened after this? Most of the IT stocks started to correct because your Nasdaq corrected from higher levels. Volatility spiked, so people were worried. They were also booking their profit in the mid cap, small cap, and the Bank Nifty was already underperforming from last couple of weeks. So the Nifty has corrected by around 1,200 points. Sensex has corrected by around 3,800 points. Bank Nifty, which already started to form lower highs, also witnessed a selling pressure and drifted lower below its 50-day exponential moving average. So now I believe that structure is weak, and today, even after the RBI policy, there was no trigger to get the recovery in the market because there was no change in the key policy rates, but they shown the concern for the inflations. So that has not supported anyhow into the market. So Nifty also corrected from 24,350 to 24,100, almost correction of the 250 points from higher levels. So I believe due to all these concerns, still the global markets are not getting stability. Sell on bounce could continue even in the Indian markets. And the VIX, which is at 16, 17 levels, likely to attract the volatile swings in the market. So I believe till Nifty holds below 24,400 zone, structure could remain under pressure for the downside target to us 23,750 to 23,500 level. However, we have witnessed some consolidating move in last 3 days, but we have noticed that every small bounce is being sold and the follow-up action is missing in the market. So to sum up the same, your volatility is at higher levels, your put call ratio is falling down, FIs are continuously selling. We have seen a spurt in the CBOE VIX, same with India VIX. However, we have seen a pickup and then decline, but still the VIX at higher levels. So if I combine all till Nifty holds below 24,350, weakness could continue for the downside target towards 23,750 to 23,500.
Okay. So, as we just talked about how the global peers are not very supportive, do you think Indian markets are very highly impacted till date with what our global peers are performing? Because it used to happen, but is that the case still? I mean, the markets are basically quite independent. So, what's your take on that?
Yeah, so very brilliant questions, and we believe that global headwinds continues, but Indian market remains steady
Right.
because the liquidity is supporting the Indian market. You
Hmm.
must have gone through the data that in the recent month, the SIP flow is more than 22,000
Yeah.
crore, and that liquidity is continuously supporting the Indian markets.
Hmm.
However, the FIs are continuously selling, but
Yeah.
DIs are buying. An SIP flow of more than 22,000, which is growing month on month basis, is the reason
Hmm.
an abundance of the liquidity is supporting the Indian markets.
Hmm.
So, so we cannot ignore the global market. We will see the profit booking decline if weakness happens into the US and other developed than the developing nations. But due to our domestic strength, the buying interest could continue, and that is the reason we might not see major corrections. We
Hmm.
might correct, profit booking may happen because already we have seen a good run up in the market. So if I combine the weakness of the global market but liquidity support from the domestic market, so because of that, corrective move could happen, but that could be bought, and there is a reason that I'm not expecting much downside, but some sort of range bound move or buy on decline stance we need to apply in the Indian markets.
Yeah. So, coming to the FII and DII data, uh, the gap seems to be narrowing now. So, is there any particular observation or comments that you might have on this particular narrowed gap?
So like what happened, I'll tell you, till the end of May, FIs were turning to the net seller.
Yes.
But in the month of June, they started some buying interest
Hmm.
because they realized that the Indian market is not ready to decline,
Hmm.
right? And two times in last 40 days, we have noticed that every small decline or the meaningful decline was bought.
Yeah.
And it happened on the 4th of June when Nifty corrected from 23,000 to below 21,300. The correction of more than, I think, 2,000 points in last 2 days in the Nifty.
Hmm.
But
Hmm.
that correction was bought smartly. And there is no worry about the political stability in the Indian markets. After that, on the budget day, index corrected. But I think that selling and the dominance of the bears was just only for few hours. The Nifty immediately covered by 500 points, and then in next 5 or 4 consecutive days, it hit the 25,000. So what we noticed that in last almost 50 days, 2 to 3 times we witnessed a major corrective move, and that every meaningful corrective move was being bought. And that is the reason that FIs also changed their stance. DIs are bullish in the Indian markets because of the liquidity. Most of the mutual funds are having cash in their portfolio. They want to deploy at every small decline. And I believe that is the reason that FIs are, the FIs buy and sell range is narrowing down. And again, what I notice, I believe that EU fund or the fund of other countries, they also need to invest in the country which is growing. And I think India plays an important role in the emerging market economics, right? And because of that, they have to invest in the country or the economy which is comparatively growing. So I think that might be a reason. And again, if you look at the interest rate or the FMC meet and the concern of the recession and the geopolitical issues in the other country, we believe India is much better place. So we don't have any geopolitical concerns, no political instabilities. Even we have visibility over the next 5 years. Even your GDP growth forecast is increasing. Like even in today's RBI policy, we are study for our GDP forecast, but we are worried from the inflations. And there is the reason that governor didn't talk about the cut in the interest rate. But we believe once the FMC go with the interest rate cut, we will also take the step and that might provide the liquidity. So we are not worried about the liquidity because the household income is coming to the Indian equity markets. The only reason, only concern is now deposits are going lesser into the banks
Yeah.
because people are now shifting to the equity market
Liquidity.
from the earlier traditional style of the FD. So I think these are the couple of reasons that why we believe that the liquidity will support or blaze the Indian equity market. And that's why I can sum up that we are worried from the global concerns or global headwinds continues, but Indian equity market may remain steady for short, medium term to long term. I cannot comment about the very short term. If Dow opens negative, we might correct. But I believe for medium to long term, no need to worry. Every major decline could be bought for the next leg of rally. And as of now, I believe that 14 to 15% CAGR kind of return could be there in the Indian market over the next 2 to 7, 8 years.
Okay. So I'll just come to Bank Nifty for once because we've had a pretty good discussion about Nifty, as you mentioned all the key levels. So Bank Nifty is slightly an area of concern probably because technically it is standing below its 50-day exponential moving average. It's like kind of barely sustaining above the 100. So do you think there is a potential for some more downward movement in this index?
Yeah, so like Bank Nifty has topped out on 4th of July.
Hmm.
So like Nifty witnessed profit booking in just 6 days back. On 1st of August, we made the high near 25,078 and then we corrected by around 1200 points. So bottom just created 6 days back. But in the Bank Nifty, that is already in the corrective move. The major top were made on 357 on the 4th of July. So Bank Nifty just started its profit bookings 6 days back, made the top near 25,078. But Bank Nifty already forming the lower highs from last 6 weeks. And this underperformance is happening from last almost 24 trading session. We are making lower top, lower bottom. And from last 4 days, we are trading below its 50-day exponential moving average. And as I mentioned that if I look at the major reason that the deposits are going lesser into the banks because people are turning more into the equity markets. Second, the concern in the global economies, that is also the reason that Bank Nifty has taken some pause in the positive move. And it technically speaking, it has taken hurdle at the rising channel, upper band of the rising channel on the weekly scale. So because of that, I believe weakness could be there, but you must have seen that in last 4 or 5 days, there was no major panic in the Bank Nifty because already we were in the underperformance and the selling pressure was already built in the banking index. And if you look at the data setup in last week, the open interest added by around 25% with decline in price, which clearly indicates that shorts are being built. And as we are below 50 DEMA, more weakness is there in the Bank Nifty. So till it remains below 50,750, we are expecting this correction to continue and go towards 49,500 to 48,888 levels.
Okay. So with this last one question to wrap this up, do you have any further comments on the outlook for upcoming weekly expiries?
So you are talking about this upcoming weekly expiry on the next week for Nifty, Bank Nifty, or you are talking anything?
The weekly.
So like if I look at the Nifty weekly expiry, so in this week we are down by around 2.5%. And if I look at this expiry, because this expiry started on just 26th of July, because 25th of July was the expiry on the July series, and on 26th of July this August series started. So in this expiry, we are down by around 1%. And the volume weighted average for the week is near 24,600, and we are already down by around 500 points from the volume weighted average. And volume weighted average means the average trade which are happening at the price. If I take the closing price or the price multiple the volumes. So we are 500 points lower than the volume weighted average. And already the market has formed the short-term top and now holding to safeguard 50-day mark. So if small profit booking happens, that may take it to lower levels. And that is the reason I'm expecting slightly decline or slightly downside swings in the market. So if I conclude it for the next weekly expiry, I believe range will slightly shift lower. And the probable range for the index will be 23,750 to 24,400. And if you look at the Bank Nifty index, Bank Nifty is also down by around 1.5% in this last few days. And we are almost 1,000 points lower than the volume weighted average. So 50,750 could act as a hurdle. Here also we are expecting sell on bounce. So more weakness in the Bank Nifty, and Nifty also could continue to see the lower range. And in both indices, your levels are shifting lower gradually from last two series, and that will continue till the immediate level is not surpassed. And the weak global cues will have more hangover and the pressure on the Indian market.
So that was really insightful, and I would like to thank you very much for interacting with us and helping us with your insights.